Some might say there's been a slowdown in digital infrastructure M&A amid a macroeconomic challenging period. But has M&A slowed down, or is it a fundamental shift in how the market works? Joining me now in Toronto for Structure Research's Infrastructure Summit 2023 is Geneviève Maltais-Boisvert, Managing Director for DigitalBridge. And Geneviève, thank you so much for joining me and for making the way to Toronto. And I know you're leaving very soon, so we'll keep this short. Has M&A really slowed down, or are we just entering a new phase of the market?
Yeah, I mean, definitely we've seen a slowdown in activity, but I think we need to keep in mind that, the last 2-3 years have been really active, especially around M&A and data center industry. So a number of investors like DigitalBridge have acquired very large platforms. They have either taken them private or acquired them in the private market. So I think a lot of us are kind of digesting those new platforms. And there's also a lot of opportunity to kind of incrementally grow those platforms by doing some new organic build. So that's what we've been focused on at DigitalBridge.
It's very interesting. And then, I mean, if we look at the M&A landscape, even from the older days, like 15 years ago, these kind of all really started with the big deals from Equinix in 2009, something like that, with Telecity, for about 1.8 billion. And since then, there's been billions of dollars invested into M&A. Is there a lot more consolidation to be done, or are we getting to that stage where there isn't a lot more to buy and it's now time to build and launch new platforms, which eventually will get into another consolidation phase? And I'll ask that next, but let's focus on the consolidation right now.
Yeah, that's right. I mean, I think one thing to keep in mind is a lot of those platforms right now are growing so rapidly. I mean, you're thinking about multi-billion annual CapEx programs. Those platforms are getting really large. So I think it's more, are those platforms now too big? How do you exit those investments in a couple of years? So I think you might continue to see some consolidation, but I think you might actually also see kind of some of those platforms being broken apart. So maybe you do separate your stabilized assets from your operating company and your DevCo, as we called it, so that kind of your business becomes a bit more manageable bite size as you approach an exit.
When DigitalBridge looks into something to acquire, what makes it an appetizing target? What says like, all right, here's the money, we want you?
I mean, first thing that comes to mind, when you ask the question is management team. I mean, those companies are much more than assets and contracts. At the end of the day, you need to have the right people in the right seats to be driving that growth. So that's really an important one. Then obviously the quality of the assets as well. I mean, are they recently built? I mean, now, even though there's very high growth in the sector of data centers, for example, because of AI, if you have legacy assets, those won't grow as much, or those won't be relevant in 10, 15 years, or even in the next couple of years when density is increasing because of AI requirements. So management team, quality of the assets, and the contracts as well. And then, kind of lead way for growth. What can we do with this platform? Can we realize outsized returns? And, kind of what's the plan that we're building with this management team?
And it's always a long-term plan as well. It's not 1 year, 12 months, 24 months kind of thing.
Absolutely, exactly. 5, 7, 10 years, I mean, whatever it is, but it's definitely, it needs to be long-term. So because you need to make decisions, not for the next quarter, but for the next, couple of years to really maximize value in those businesses.
And I love I love the fact that you actually put management as the first kind of priority when you acquire a business, because culture is so important. And if the humans behind the desk don't do the job properly, or if the team doesn't match, doesn't click, then the business is never going to work. But you also said AI. So I was going to ask, how has AI in the last, 6-9 months, because this new wave over the last 6-9 months, how has AI changed, if changed at all, your strategy around investments in digital infrastructure? Has it, what's the conversations in the boardroom? It's like around AI.
Yeah, well, it's definitely getting discussed quite a bit. And AI ultimately, and generative AI, which is really kind of what caught the market by surprise last year when ChatGPT came out, is changing every aspect of our lives, and it's going to touch every single aspect of digital infrastructure, which was what we focus on at DigitalBridge. But where we're seeing it right now, which is still the early innings, is around our data center platforms. I mean, there is an even greater supply and demand imbalance, where there's a lot of demand coming from customers, your big hyperscalers, GPU as a service, or they're even large enterprise, and there's the supply of data center capacity is not yet catching up. So there's a very interesting window of opportunity to build new data centers at very attractive returns. So that's from that perspective. AI, is going to touch everything we do, but in the short term, data centers are being the big beneficiary, but then fiber and towers and the other sectors we cover are going to see the benefits as well.
Very interesting. I will ask you about DigitalBridge's the plans for data centers over the next year. But it's just a quick side question around availability, because for example, at this conference we heard this morning that 2024 might represent a bit of a drought in terms of capacity, because everyone is building, but it's building for 2025, 26. Are you seeing the same thing? How are you worried about 2024 in terms of new data center capacity coming into market? And I think this is more to do with North America than anywhere else.
Yeah, no, I mean, absolutely. I mean, it's, 2022 was a record year in terms of absorption or new capacity being sold and developed. 23 is going to be even higher. But a lot of players, even if you make investments today because you've sold all your capacity, not the delays, but the timing in the supply chain for generators or electrical equipment, you're going to get goes in 2-3 years. So even if you wanted to have more capacity next year, if you haven't made those investments 2 years ago, you won't have that capacity. So that's why we foresee, prices continue to increase in terms of, at which price you sell capacity, and just like the supply and demand imbalance continuing. But that's why it is important for our businesses to make the investments required today to make sure we have the capacity in a couple of years' time.
And then, of course, the DigitalBridge platform is pretty much present in every continent right now. What more are you going to be doing, and especially within the data center space, what more are you going to be buying, building, investing, acquiring, exiting? What are you going to be doing around that space?
Yeah, that's how much time do you have?
Because we have all day. You're the one that has a fight to catch today.
This is a great question, but I would say right now, first priority is really making sure our portfolio companies are well capitalized, so they're able to seize that opportunity. And even though we have a number of platforms across a number of geographies, we don't have platforms in every business segment, globally. So we think about the market in terms of serving the public cloud customers, so that's our hyperscale platforms like Vantage. Then we think about kind of a private cloud provider, somebody like a Switch. And then we have our edge platforms like a data bank in the US. So there's a number of geographies where we don't have, companies necessarily targeting all of those segments. So that's going to continue to be a priority to target those additional segments. And frankly, we always need to think about, how we're going to realize, returns on those platforms. And that's something we have keeping in mind, but I would say in the next couple of 12 to 18 months, the focus is really making sure our portfolio companies are well capitalized and that we identify new platforms for investment.
Over the years, have you seen the conversation with investors when you go out looking for money to invest in these platforms? Have you seen the conversations really shift? Have they become more educated about this market? Have the questions changed, the questions that they ask? Do they ask more questions about power, less questions about power, more questions about culture management? How have the conversations changed with the people financing all this?
Yeah, no, I mean, absolutely. So before joining DigitalBridge, I was with a large pension fund here in Canada. And, back in the early days, maybe 7 or 8 years ago, investing in data centers for infrastructure investors was kind of unheard of. So definitely this was very early stage in the cycle. And I would say that now most infrastructure investors, even if they don't have exposure to the space, they're very well educated. The new entrants we're saying in terms of wanting to have exposure, but still earlier stage, in general, in terms of their questioning or understanding of the sectors, are real estate investors. I mean, with everything that happened, around commercial real estate, I think they're seeing a lot of value in diversifying their portfolio. And at the end of the day, a data center is, a piece of land, a shell, and cooling equipment. So they're lacking the assets, but I think a number of them still have to kind of get through the education size of, you also have an operating company. So you have a management team, to your point, which is going out there, selling capacity, and is that real estate enough for some of those investors? But the good news is we're seeing some new entrants, which is going to bring some new capital to the space, which is great for those platforms.
Okay, and I think it's impossible to talk about capital and not touch on sustainability. How important has sustainability been in all this? We've seen Vantage, one of your portfolio companies, raise billions of dollars in green bonds and in green securities. Data Bank is another one that's following the same footsteps. How the sustainable capital, if that's what we call it nowadays, how does that work within the DigitalBridge family?
Yeah, I mean, sustainability is critical. I mean, for a number of reasons. I mean, access to power is critical, and access to green power is even more important. And as you know, that's been driven, by the customers as well, who do require, if it's not 100% renewable today, it's kind of a very short timeline to get there. So that's been very important in terms of making sure we're future-proofing those businesses, because access to power is critical, and especially green power. So where available, we've tapped kind of ESG ESG focus or sustainable type of bonds. I would say it's still kind of a smaller part of what we do, but as those businesses require more and more capital, we're definitely going to be exploring all the different options.
Okay. Usually I ask this next question with a lot less money involved, but because it's DigitalBridge, you put a lot of money out there. If I gave you $10 billion today to go out and do something, what would you do and where would you go? What's an exciting region that you were like, oh yeah, we need to go?
I think I could easily split it within our data center portfolio companies, and there would be nothing left very quickly. To be honest, we are seeing very attractive growth on the data center side globally. You mentioned earlier, we are in every continent, including Africa. We have some data centers there as well. And there's some very attractive returns across all those geographies. North America is kind of leading on the whole AI front, but Europe is going to be very quickly behind, and the other markets as well. Latin America, with our platform Scala over there, has been a very good market for us as well. Important increase in capacity. So, I wish I had $10 billion. It wouldn't take long for it to be spent.
I don't know. Nowadays you wouldn't. I can give you $1 trillion if you want, because this is all fictional money.
Exactly.
Then I was going to ask, so I'll keep you for too long. So we are in Toronto 2023 for Infrastructure Summit. When we come back in 12 months to the same place and we have another conversation, another chat, what's the one thing you would have expected the market to have done, to have changed, to have accomplished? What's the one thing you think is going to be the big thing in the next 12 months?
I hope as an industry we figure out power, which is very high level, very vague. But I do think we're now at kind of an inflection point where there's massive opportunity with the customers. But if we don't fix access to power and just our transmission grid, which is not ready for this massive influx of new demand, that's going to put it's going to impact just the growth of the overall sector and what we can accomplish, even as humankind, frankly. So I think that's an area we're spending a lot of time on. How and where should we invest in power? Should we be involved? Should it be a partnership?
Okay.
So I do hope that that's kind of where there's more granularity around solving this power issue.
Do you think one of the underlying issues has really been, or the barriers has really been the fact that the energy guys were not involved in this sector? Now they are a bit more involved, but they weren't involved even just 5-6 years ago. They were really part of the discussions.
Yes and no. I think there's a lot of generation capacity coming online, but the issue is how do you bring those electrons from this windmill to the data centers? And that's kind of that distribution and transmission layer, which is just not ready to cope with that. So, is it a lack of investments? Is it a fact that those are regulated businesses where if there's not an incentive to put additional money, you don't do it? But I think that's why, as data center operators and investors, we're going to have to be part of the solution and see, can we bring those assets, behind the meter, closer to the data center, so you don't need to overload the grid.
That's very interesting. I could now go into asking to microgrids and energy generation within data center fields, and then selling that back to the grid. But I don't know if you want to navigate through that right now. But Geneviève, thank you so much for talking to me. As for your home, thank you so much for watching, and check our website and social media. Follow us on social media for more timely news from the digital infrastructure sector worldwide. At the Tech Capital, you lead, we report. Bye for now.